Money. Money.
Today, I want to focus on any of you first-time home buyers out there today that are renting and looking at the possibility to get into home ownership. Take advantage of it. The interest rates are extremely low right now. We have not seen them go up quite yet, but they will. And today I want to share the Mortgage Credit Certificate, or MCC, through the Washington State Housing Finance Commission. It's a tax credit for first-time home buyers, 20% tax credit off of all of the interest you pay in your mortgage for the life of the loan, dollar for dollar. This is a credit, not a deduction. So let's use an example. If you had a loan amount of $400,000, let's just say interest rates today at 4%, which that's just hypothetical purposes only because it is based on a lot of different factors, but good estimate to go with for a 30-year fixed. You'd be looking at interest paid of $16,000 for the first year. Easy math, take 20% of that. That means you're going to save $3,200 on the taxes you would pay that you would not have to pay if you qualify for the MCC tax credit. Divide that by 12 months, it's $266 a month, or really what does this mean for you in buying power? An additional $40,000 to $50,000 increase in buying power. That can make a substantial difference in what you can get out in the real estate market today. Now, the $266 a month, or whatever that savings you're going to receive, can also be used to help qualify for a higher purchase price as well. So if you're hitting a maximum amount of what you can approve for, the MCC tax credit, Mortgage Credit Certificate, can help you qualify for more. Now, how you see that money actually on a monthly basis is consult with a licensed CPA or your accountant. Find out how to amend your W-4 with your employer once you own your home so that you can see that money in your paycheck rather than waiting to the end of the year to receive those benefits. It doesn't matter how you're filing. Your deduction of homeownership is based on whether you file standard or not, but the tax credit is going to be there. If you pay enough income taxes, if you pay at least $3,200 in income taxes for that year, you're going to receive a $3,200 discount in taxes you'd have to pay, which means that you'd break even. So it's not like the deduction. It doesn't matter how you file. It's a dollar for dollar credit based on the income taxes you would have otherwise had to pay. Again, seeing it in your monthly paycheck seeing it in your paycheck on a monthly basis is just amending your W-4. Now, the tax credit is, again, not replacing the deduction, but in addition to. It's not a loan program, but a tax credit, which means that it'll apply to any of the loan programs you choose to go with: FHA, conventional USDA, VA financing, all the different options, 30-year fixed, adjustable rate mortgage, as long as your lender participates in the MCC program. So you're the tax credit, which you need to make sure that they do. It can also be used with down payment assistance program, which I want to talk about. Now, the grant that I'm going to talk about is actually not through the Washington State Housing Finance Commission. They do have down payment assistance as a second mortgage, which means you need to pay it back. But if you can qualify for an actual grant, the grant means that you actually do not have to pay it back. So there's a great grant that's available through National Home Buyer Fund. Grant meaning not paying it back. It is, so it's not a second mortgage. It's at a 0% interest rate, which means that there's no payment either. So it truly is just free money that's being applied towards your down payment. It's based at 5% of your loan amount. So if you were doing a low down payment at 3.5% down, the 5% is going to cover the down payment, plus a little bit can go towards your closing cost and prepaids. You do not have to be a first-time home buyer to qualify. So if you're purchasing your second home, that's totally fine. You just have to be buying it as an actual primary residence. Now, it does have an income limit. The income restriction is $97,000 a year. So this is based for people that are in a lower bracket of income. But what you can do is if you have a significant other or a spouse that's going to be on the loan with you, if combined together, the two of you make more than $97,000, leave one of you off the loan. That would be acceptable if the other person that's on the loan makes less than $97,000. So it's not a household income, but it's the income that's based on the loan application. There is no recapture tax. It means you don't have to pay anything back when you sell your home. And there's no limits to assets of what you actually have in your account. So if you want to utilize this and keep your own money, as long as you meet the income requirement, then you're fine. You also can get your earnest money back at closing. So it's a really great way to get into a home using the combination of the MCC Mortgage Credit Certificate tax credit which is for first-time home buyers, and using the grant program as well to help you with the down payment. Now, I didn't mention the income restrictions on the MCC, being because that's going to be based on county versus the grant program. It's just a straight $97,000. Anywhere you're purchasing in Washington, it doesn't matter. But on the MCC tax credit, it's based on the county that you're actually purchasing in. It's also based on the number of people that are in your household. So just giving one example here, 1 to 2 persons in your household, that's $90,000. If you have a baby, it would put you to a 3-person household. That would take it up to $97,000. The income restrictions go down in some of the other counties. But again, it's a great way to get into a home. First-time home buyer for the tax credit. Why would you not use it if you make that under that income limit? And then those of you, even if it's not a first-time home buyer, if you want to take advantage of some grant funds that you don't have to pay back, pretty awesome. If you have any questions, give the show a call at 1-855-400-1150. Again, 1-855-400-1150. Coming up next on the Money Hour, do you have extra funds to invest? If you do, what asset class options do you have to invest in? Brad Van Vectrum with Private Wealth Management Solutions right here on 1150 AM KKNW after this short break.